Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, entrepreneurs, executives, thought leaders, and talented musicians and artists all around the world in crypto and blockchain. And I have an amazing guest for you today. He is the partner and CMO of SynFutures. His name is Mark Lee. Mark, welcome.
Jamil, thanks for having me today. Happy to be here and looking forward to having a candid conversation about the crypto space with your audience.
Awesome. Thank you for joining me. So first question I ask pretty much everybody is what is your background, and is it a logical background for what you're doing now?
Yeah, I think I share a similar background to a lot of people who got into crypto. I did my undergrad in finance, and then I worked in TradFi, not on the trading side, but at a boutique PE firm working with mid-market manufacturing companies. Not terribly relevant to crypto, I would say, but I think the formal education in finance, it gives you a little bit of a framework for what crypto has been expanding on. So I started my career in TradFi, spent about 5 years there, and then I decided I wanted to do something new. So I went off to start a marketing and PR agency. First focused on Web2 brands. So a lot of think like Silicon Valley startups, fintech companies, enterprise software, consumer apps. And then around 2017, 2018, I started getting exposure to crypto because my specialty was working with emerging technologies. And so I started hearing about blockchain from some of the VCs I worked with out in the Valley. I came across some really early projects at the time, like Solana, which everyone must be familiar with by now. And I found it fascinating. So in 2018, I kind of made the full transition from just kind of Web2 tech into Web3. And I've since worked with a ton of amazing brands in the space. I worked with Huobi for 3 years. When they were like a top 3 global exchange. This is pre-Justin Sun. And so it's been an amazing experience. I joined the SynFutures team very early on as one of the kind of founding team members back in 2021, pre-product launch. And it's been an interesting journey since. And I'm looking forward to sharing more about SynFutures and what we have going on.
I'm interested to hear about that. So yeah, let's do that. What is SynFutures all about, and how do you help traders with arbitrary futures contracts?
Yeah, sure. So SynFutures, from a high-level summary, is a permissionless perp specs. What that means is anyone can come to our platform, connect their wallet, and start trading any asset with a price feed. So this is futures contract and then perpetual swaps, which are immensely popular in crypto. The purpose of derivatives is to give people an opportunity to better arbitrage and create profit opportunities. This means, typically when you buy crypto on like a centralized exchange like a Coinbase or a spot exchange, spot DEX like Uniswap, you're just taking a long position, right? You're buying to hold and you're hoping the price goes up at some point, at which point you can offload. With derivatives contracts, you can kind of speculate on both sides, right? So you can bet on the upside and the downside. So you can say, hey, I think this meme coin is pumping too much right now. I want to take a short position, which means once the price falls, you're in profit, right? This is great for creating new profit opportunities, but also for hedging your risk. Let's say you feel like you have too much exposure to Bitcoin and you want to protect some of your downside, right? Then you could open up a short position to capture some of that profit to offset some of the losses on your spot holdings. So I think there's a lot of different things you can do with it. What we offer that's unique is compared to, let's say, an FTX or Binance Futures, we're fully decentralized. Like I mentioned, that just means, all you have to do is connect the wallet. We don't take any of your personal information. There's no KYC process. As long as you have a wallet, you're able to connect and trade. I would say it's a pretty seamless process, but obviously there is a user experience barrier going from CeFi to DeFi. It's starting to improve. And some of the major benefits of trading on DeFi is that it's completely permissionless, meaning, it's up to you what assets you trade and even what assets you list, which is unique to SynFutures, right? So if there's like some obscure meme coin or altcoin that's trending and you want to see it being traded on SynFutures, anyone can go and list that asset, right? There's no permission needed from our team, the core team. And it's a very seamless process. Within 30 seconds, you can get an asset listed and anyone can start trading it. So I think that's something unique that we bring to the platform because it really allows us to support a wide range of assets, right? Like these long tail assets that you might not get on Coinbase or you might not get on Binance, as an example.
So if I have, I don't know, a decent number of a certain token, and it's more than some of these exchanges over in Europe and Asia, even, I can go onto SynFutures and I can list that token and sell it.
Well, you could list the trading pair, which means you're going to enable people to trade that asset. So let's say you have Jamil coin, right? And you want to see a futures market around it. You want people to speculate on your coin. You can go and list it yourself. All you have to do is provide some of the initial liquidity. It's very, very similar to Uniswap V3, right? Uniswap V3, anyone can list a token there as long as they provide the liquidity. It just means like, if you look at centralized exchanges, the listings are determined by the core team. On some of the decentralized exchanges, it's similar, but sometimes it's governed by like a DAO, right? And the DAO, you have to submit a proposal. It has to get voted on. It might take 30 days. It might not get approved, right? So for us, we just give the opportunity for any project or any individual to create any futures market for, crypto, altcoins, meme coins, even NFTs, right? So anything with a price feed, you can create this market where others can speculate on.
And that wouldn't be in violation of, say in the US, it would be a violation of the SEC.
Well, so we geo-block US users. We don't support US users, similar to many DEXs out there. There are some other jurisdictions we block, like China, but in markets where we're available, yeah, it's free and permissionless.
Got it. Okay. Great. Awesome. I would love to see that here.
Us too.
Yeah, that'd be great. So up until now, what do you see? What have you seen until now? Then what do you see in the future as DeFi's role in helping to regulate the global crypto industry?
Yeah, I think what we've seen in the past with FTX and some of the other centralized exchanges, not only centralized exchanges, but even like centralized lending platforms that have collapsed, is that we're now looking at a shift from custodial to non-custodial, which means you have full control over your assets, right? As a DEX, we don't take any ownership, any control of a user's assets. They're managed by a smart contract. And so there's no like intermediary risk when it comes to mismanagement, like we've seen in the past. So I think one of the big things is DeFi is helping people take more control over their assets. It's about, really having control over your own finances, right? The other benefit of DeFi, I think, is accessibility. So I think a lot about like, let's say real world assets, right? People in developed markets like the US might ask, why do we need tokenized equities, right? I can just go on Robinhood, I can go on E-Trade or any of these platforms and just buy these stocks. That's true in developed markets, but not so much in emerging markets, right? So if you're in, let's say, Turkey, Ukraine, Nigeria, Kenya, you may want exposure to global markets. You may want, maybe some index funds from the US. You may want, maybe you want some exposure to Coinbase stock, right? But it's incredibly difficult for them to access. So DeFi tokenizing some of these real world assets increases the accessibility level for global entrants into the TradFi markets. That's one example. So I think it's really, I think DeFi has a huge role to play in democratizing access to financial services and products.
Interesting. You said there's been a movement from non-custodial to custodial. So we're talking about these Bitcoin
Well,
ETFs.
the other way, custodial to non-custodial. But the Bitcoin ETFs are interesting because I think it's certainly something we should celebrate, right? It introduces a whole new wave of institutional interest into the crypto ecosystem. But the one flaw about it is Bitcoin ETF is still on TradFi rails, right? It's still a TradFi product. You still don't have full custody of your assets. And so I think it's kind of a double-edged sword. It's great because we get more adoption and we get more liquidity into the market and we get more participants in. But at the same time, we kind of are continuing to double down on the TradFi infrastructure. But I think it's just like, this is like the Trojan horse, right?
So what do you see as that the real barrier, like, in getting off the TradFi rails and getting onto the, DeFi rails? How's that going to happen?
Yeah, I think there's a lot of, well, before we can discuss like how's that going to happen, I think we can talk about some of the barriers, right?
Okay.
Going from, I think, centralized CeFi to DeFi, there's some immense like UX and UI barriers right now. Like, to give an example, when you download Coinbase as an example and buy, it's pretty seamless, right? But if you want to trade on a DeFi platform, there's so many steps you have to take on the way. First, you have to rely on a CeFi platform as an on-ramp, right? So you have to go buy your initial crypto with your fiat somewhere, and that's typically not DeFi. Although DeFi is starting to integrate with some of these fiat on-ramp services, like where you could buy crypto with credit cards. But I think that's, in many cases in a regulatory gray area, right? But then you also have to create this like decentralized wallet where you have, 16-word seed phrase. And if you lose that, you've lost your assets forever. It's a bit clunky for like, I think the normal retail audience to get into crypto. You have to connect your wallet, you have to sign so many transactions. And so I think going from nothing to being able to make that first trade on DeFi, there must be, 5 or 6 steps along the way when it really should be maybe 2 steps, right? You create an account, you trade, that's it, right? So I think that's a huge barrier that we need to solve. Part of this comes with education, right? Like teaching people how to onboard into the DeFi ecosystem. And I know there are a lot of projects working on this. We have something called Syn Academy, which teaches people how to use crypto, how to trade, and just general topics about crypto. But ultimately, I think that's not a scale, like education is important, but it's not a scalable solution, right? Because the fact that you need so much education for someone to use crypto just means there's a ton of inefficiencies along the way. I think the real solution is making innovations on the infrastructure side. So to give an example, instead of signing a transaction and then having to interact with your wallet again to trade, how do you abstract away some of those steps using things like account abstraction, right? So I think there are a lot of like new developments in this space that are making it easier for people to make the transition from CeFi to DeFi, but I still think we have some ways to go.
Yeah, I'm wondering how account abstraction plays a role here.
Yeah, in a couple different ways. So first is how can we use account abstraction to combine some of the transactions into a single step, right? And by doing that, we reduce the number of steps a user has to take. So to give an example, like I mentioned, typically when you're new on a DEX and you want to make a trade, first you have to interact with your wallet to sign to approve you to even trade those assets, right? That's just the first step. But for, I think, a normal users, they're not used to taking these multiple steps, right? They're used to one-click access, right? So you do this one click, then it asks you to now approve the transaction. First, you've approved the use of the asset. Now you're approving the actual transaction that you want to make. There are ways to use account abstraction to combine that into a single step, right? So from a user's perspective, all they do is click one button and now they're able to trade, right? I know it doesn't sound like this, monumental problem that's being solved, but these small interactions go a long way. Like if you look at, I used to work in Web 2, and if you look at like the consumer apps in Web 2, they all try extremely hard to minimize the number of steps a user has to take, because for every additional step a user has to take, the level of churn goes up, right? So, you lose people along the way. And so I think Web3, we're already too small of an industry to lose people along the way. So, we definitely have to use account abstraction to optimize. The other type of extraction that's interesting is chain abstraction, right? So, right now, if you're trading across different networks, different coins, it's a really inefficient experience. You have to determine what network you're on. You might have to bridge assets over to different chains. Like if I take a normal crypto trader in the real world, like in the non-DeFi world, and I ask them to trade different coins, they get so confused, right? They're like, oh, I want to trade this meme coin, but it's on Avalanche network. This one's on Arbitrum. This one's on Solana. How do I trade it from one single platform, right? When you use a centralized exchange, you never have to think about that. You just have to think, all you have to know is what asset you want to trade. You don't have to think about, are my assets on that network? What network is that coin on, right? And I'm starting to see more projects that are on the DeFi side that are trying to abstract away chains. So a user can trade without thinking about what chain it's on. And it's all happening on the back end, right? All the bridging, all the flow is happening on the back end. And I think that kind of abstraction is necessary for like the next wave of DeFi users.
I'd agree. The one area that I think, I don't know your thoughts on this before we talk about more about the global trading landscape is, I tried to orange pill friends and family for 7 years, right? Since I've been in the crypto scene in 2017. And no one was interested in like they don't want to buy a Bitcoin, but they should have. But now like all these ETFs came out, and they're like, oh, when can I buy an ETF? I'm like, what? Where was that 180 degree shift? And I think it's the fact that these institutions are trusted, while they don't trust the protocols themselves. How do we get people to trust the protocols, maybe more so than these institutions and these TradFi rails?
Yeah, that's a good question. I think again, some of it goes back to user education. Like some people don't understand why it's better to have self-custody, right? Most people they think, oh, I leave my money in the bank, it's safe, it's fine. But no, not. I mean, we've seen over the last couple of years, maybe it's not fine, right? And depending on what market you're in, not in the U.S., but there are some markets that have strict capital controls, right? These governments and these, central banks can determine what you do with your money, where you send your money, and that, I think that becomes a slippery slope, right? I think if it's your hard-earned money and the money that you've kind of invested over time, you should have full control over it. If you want to send it out of the country, you should be able to, right? And so I think educating people on like the benefits of self-custody is gonna help alleviate some of the trust challenges. I mean, these TradFi organizations, they've built their brand over, centuries, right? And crypto, it's been, at best a decade or so, right, in the limelight. So I think it's still a long way to go. But I mean, we are having like bigger kind of trusted crypto brands pop up, right? Coinbase is a very well-trusted brand. I mean, there's still CeFi, but I think what they're doing with Base and Coinbase Wallet, they're definitely moving in the right direction, which is decentralizing parts of their ecosystem.
I agree. So let's talk about the overall crypto trading global environment. What is it like today? And where do you see it headed?
Yeah, I still think crypto trading is somewhat limited in terms of the audience, right? You have a bunch of these retail traders across many different markets. I mean, what's interesting is like some of the highest volume comes out of some of the emerging markets, like Vietnam, for example. It's like I believe a top 3 market for Binance in terms of volume. South Korea is a extremely active crypto market, mostly on the CeFi side, but still, the US has always been a high value market, not in terms of the number of users, but in terms of trade value, right? And so we see these pockets of kind of crypto adoption across both developed and emerging markets. I mean, they have different drivers, I think. In developed markets, people trade crypto as an alternative to other risk assets, which just means they're chasing yield, right? They're looking to diversify, and crypto is one of the rare kind of risk assets where you have asymmetric risk, right? Risk and return, which means, the potential for a return is much higher than the potential for loss, right? In terms of symmetry. In emerging markets, it's interesting because they turn to crypto out of necessity. So of course, they'd love to generate some yield too, but some of them, like if you look at Turkey, where they have huge currency deflation, right? People turn to stables. I spent some time in Turkey and I speak to the locals. Crypto adoption extremely high there, and they're looking to get into crypto, specifically stables and maybe the majors like Bitcoin and Ethereum, because they're looking to hedge their currency risk. They're watching the lira drop and they're thinking, how do I safeguard my assets and how do I keep control of them? So they turn to crypto. So I think depending on the market, people trade crypto for very different reasons. South Korea is more of a degen market, right? So they're a big speculative market. They use this as almost as like a, I don't want to say gambling product, but like, sometimes they use it for like, economic gain, and there's nothing wrong with that. But I think the major challenge is institutional adoption is still somewhat limited. I mean, now with the Bitcoin ETF and hopefully the Ethereum ETF, we'll see more kind of volume pick up. But as it relates to DeFi, it's been a major challenge for institutions because they can't necessarily trade on DeFi because they need to know their counterparty, right? So I think CeFi adoption has been growing. DeFi is still kind of lagging a bit, but that's to be expected because the barriers are much higher from both a user experience and a regulatory perspective.
You mentioned South Korea, you mentioned Vietnam, and when I think of Asia, I think of countries that are addressing regulatory developments properly. I don't think of the US that way. I think of those Asian countries that way. So regionally, what have been some of the crypto regulatory developments in Asia that not only could impact your business, but that could show as an example to regulators here in the US?
Yeah, I think within Asia, Hong Kong is a great example because Hong Kong has always been, a financial hub one of the financial hubs of the East. And in the last year or so, they've really embraced the idea of Web3 and just digital assets, right? I think that's what they call them. They've approved some exchanges to go live there. They just announced that they would approve a spot Bitcoin ETF there. So Hong Kong has been fairly progressive, and what's exciting about it is, some people, I wouldn't say this is true, but some people speculate this is kind of China's testing ground for crypto, right? Because it's a small market, it's something they can control. It's only like 7-8 million people, and so I think this is the perfect kind of testing ground for some of these crypto initiatives. But I think Hong Kong also sees that like the future of everything, including assets, is digital, right? I mean, some people, I have friends who kind of laugh and they're like, oh, what's this idea of digital assets, right? But if you really think about it, everything in our lives have become digital. Like the way that we're interacting right now through Zoom, I mean, this has become the norm. So it's not too far-fetched that digital assets would be the future. And Hong Kong is trying to make a kind of I still consider them a little conservative with their regulations, but I think they're making some progress. They're making efforts to understand the asset class and to recognize the asset class in a framework that still kind of protects everyday investors from some of the fringes of crypto.
The fringes. What would be some of those fringes?
Yeah, I just mean like when you dive too deep into crypto Twitter and you have all these like Ponzi-esque crypto projects that pop up by night, they're gone tomorrow, these kind of things. I think, yeah, I mean, it's up to it's up to some of our regulators to try and protect consumers from these kind of fraudulent cases, like these bad actors. But I think Hong Kong has recognized that, of course, there are always bad actors in every market, in every industry, but there are some legitimate use cases in this space. And yeah, they're trying to push responsible regulation, I would say.
Okay. So I deleted these from Telegram, but there's these because I was getting thousands and thousands and thousands of messages that pop up, but there are these decentralized exchanges or these meme coins, like thousands of like gambling tokens that pop up every day, like you said. Like what's the role of them with your platform? Like, are you promoting all these like what's stopping somebody from being able to list these gambling tokens on SynFutures?
Yeah, I think the biggest challenge for them would be, I mean, so we're a permissionless platform, which means anyone can list anything, right? So we're simply providing the infrastructure and the trading platform for others to use. But the challenge for them would be they would have to invest considerable resources into providing liquidity on SynFutures, which is more of a longer term kind of play. And I think a lot of these projects, these fly by night projects, they're looking for like the quick and easy exit, right? So I don't think it kind of aligns with their priorities and their strategy.
That makes sense. Yeah, that makes sense to me. So I want to stay on the actually. What I'm asking you a generational question.
Yeah.
What are you, Gen Z?
No, I'm a millennial.
Okay.
Yeah.
All right. So
Getting older.
You talked about South Korea, and I'm looking at South Korea compared to the U.S., and I'm looking at the younger millennials and the Gen Zs, and in South Korea, the crypto choice is XRP, and in the U.S., it's anything. It's any token that will give you a pump and dump, quick scheme, 10x overnight or 100x or whatever. So why isn't Asia are they looking at XRP as being, that solid? I mean, I'm not trying to show XRP in any way. I don't own it. But why is such a stark contrast and difference? What are your thoughts?
Yeah, it's interesting because Asia, like these tokens or projects that have Western roots tend to have a premium, right? XRP, I think, has done a pretty good job. I don't hold any XRP, but XRP has done a good job at like associating themselves with some major Western brands, TradFi brands, and so forth. So I think that kind of resonates with the Asian audience. They have a saying like in China and in Korea, like a lot of the crypto communities, they don't really like local projects, right? So if you're in Korea and you say you're a Korean project, then the Korean community goes, then no need to pay attention to them, right? Because they're more captivated by like these Western brands. And I think that's just, that's not unique to crypto, right? I think that's a global phenomenon across all consumer industries, right? So like if you look at a consumer brand, people typically put a premium on a Western brand versus an Asian brand. Same thing happens in crypto. And so I think that's why you're seeing like this fascination in Asia with like some of these more Western brands like XRP who have done a great job at branding, I would say.
Got it. I wanted to ask you that because you're a marketing guy, right? CMO, right? So, I want to go back to what you said about, you could trade not only derivatives, not only have different prices on your platform, but you enable NFT futures trading. NFTs have fallen off a cliff, right? So what would be like, what's the benefit for NFT futures trading? And do you see a comeback in that space where there could be a lot of potential for investment and trading?
Yeah, I do. I mean, so I got pretty big into NFTs in 2021 during like the last NFT bull market. Great times. but yeah, to your point, it's completely fallen off, and I think that's okay, right? Like, because you have the initial hype and speculation, then you have the cool off, and now I think we'll see more and more like tangible use cases for NFT, whether it's be beyond just JPEGs, right? I think JPEGs will always be there because there's a cultural aspect of it. It's like saying why were people so crazy about Supreme clothing, right? It's not because of the fabric or material itself. It's because there's a cultural movement behind it. Same thing. I think that same reason applies to like Bored Apes and Pudgy Penguins and all these guys. And I think that's going to continue to exist. But where I see growth is in other NFT tangible use cases like gaming NFTs, like for token gated communities, tokenized assets. We'll see it in the membership sector, right? So, in the future, maybe we'll see NFT based airline, rewards, loyalty programs. I think those make a lot of sense to be on chain. And even, we saw like some people experiment with NFT membership based clubs where you use NFTs to verify ownership. So I think NFTs will definitely make a comeback. So there's definitely a market for it. The need for NFT futures is, I think, for any financial market to have any kind of institutional adoption and mass adoption, you need to give people a way to hedge risk and to speculate on both sides of the equation, not just hold an NFT and watch it go up, but there has to be other participants in the market to create more liquidity and market depth, right? And part of that comes with giving people the tools like derivatives to be able to short and long NFTs, to hedge some of their risk, and to apply leverage.
Let's talk about leverage. Actually, I want to get your thoughts on this. So in 2020, in July, August of 2020, we had DeFi summer. We had DeFi summer 1.0, right? And a lot of people are asking when, for the last 4 years, like when DeFi summer 2, right? Do you think it's this year? And if it's not this year, do you think we're headed into AI summer? What are your thoughts for the rest of 2024?
Yeah, it does feel like we might see a DeFi summer again this year. I don't want to speculate too much on it, but just from what we're seeing in terms of like we see volumes increasing across many different dexes. I mean, there are a lot of. I think this is going to be the year of points programs, right, where everyone's accumulating points in some way. So I think because of that, we'll see an influx in DEX activity, DeFi activity in general. But I think I'm hoping that this DeFi summer, whenever it is this year or next year, is going to be a little different because the last one was purely driven by speculation, right? Not really by use case. So, I mean, I'm guilty of participating in a lot of these, like, I was using all the ohm forks and, like these 3-3 kind of yield farming kind of projects. And hopefully with this DeFi summer, we see people use DeFi, not just for the incentives, not just for points and airdrops, but also because it solves like a real need. Like I mentioned earlier, like through RWAs, getting access to certain assets that you might not have otherwise had access to, bringing liquidity to traditional markets through tokenization. And so, yeah, I'm hoping that this becomes a more sustainable and scalable DeFi summer.
I happened to check out some of the chat groups during that yield farming days, and it was like I was reading Egyptian hieroglyphics. I couldn't make heads or tails. So you're smarter than me, you can figure that out. That was a crazy time, right? So,
not smart enough to take out my assets. I kept it in a lot of projects and got rugged many times.
Okay, yeah, me too. So awesome. Well, that's not awesome, but it's awesome. We talked. So I want to thank you very much for your time today. I enjoyed speaking with you, and I have one last question, and it's how can people find out more information about you, about SynFutures? How can they use your platform? How can they do that?
Awesome. So a couple big things coming up that I want to share with your audience. So I think at the end of February, early March, we're going to go live on the Blast mainnet. For those who aren't familiar, Blast is this L2 that has a ton of hype right now. It's from the founders of Blur, the NFT trading platform. And they've done an amazing job at garnering interest for their new L2. So we're going to go live on that platform. And with that, we're launching our own points program. So you're going to be able to earn points for trading, for referring, for providing liquidity. And simultaneously, we'll be launching the biggest DeFi trading competition ever. So we're going to have a massive stablecoin prize pool. Anyone can participate and start trading for a chance to win. I can't disclose the size of the prize pool yet, but it's going to be a significant figure. So I think that'll be really exciting. For anyone who wants to stay up to date, I would say our Twitter is the best place to start. It's at SynFutures DeFi. And there, you'll be able to find our Discord channels, but you'll also be up to date on the latest news about like this trading competition that's going to be coming up and our points program.
Awesome. I'm looking forward to the trading competition. That'd be pretty cool. So
awesome. Looking forward to seeing you on the leaderboard.
Awesome. Thank you very much for your time today.
All right. Thanks so much, Jamil.